Hello everyone, welcome back to Lab for Crypto. Today I will speak about altcoins. As I constantly see on social media that the altcoin season is starting, I decided to make this video and explore these claims with you. Except from the traditional altcoin index, I would like to see the ultimate influencer of altcoins, which in my opinion is global liquidity. I will dive a bit into macroeconomics today and explain how they impact our understanding of the global economy and see where we are in the crypto cycle. Before we begin, make sure to subscribe to the channel and hit the notification bell so you will never miss on our insightful content. Now let's get started. When assessing the health of an economy, we often look at various macroeconomic indicators. These include the debt of a country, the debt to GDP ratio, inflation, interest rate, gross domestic income, unemployment rate, and global liquidity, among others. Today we'll be discuss which of these indicators, in my opinion, are crucial to monitor at all times. First, let's talk about global liquidity that encompasses inflation and interest rates. Global liquidity refers to the balance sheets of major central banks, such as the US, Europe, Japan, China, England, and others. You can find many models for global liquidity on the internet, and of course on TradingView, if you click on indicators and type global liquidity or net liquidity, you will find many models for global liquidity. Small deviations that you will see between the models is due to the number of central banks that one can use for the calculation of global liquidity. One can use 10 central banks, someone 20, someone 30. But if you have the major economies inside the calculation, you will get to the same result. Our scope today is understanding this metric and how it affects crypto and Bitcoin. So I will try to explain what happened to the economy recently and how you can use it into your advantage. The balance sheet of central banks provides a snapshot of their assets, liabilities, and capital at a specific point in time. We are going to use our model for the calculation of global liquidity, but of course you can use any model that you prefer. The only difference between these models is the number of central banks that you are going to include in the calculation of global liquidity. But if you include the major banks, you will end up in the same results as most of the models. In the graph, we see with the red color the global liquidity and with blue color the market cap of altcoins. And I have excluded Bitcoin and Ethereum in the calculation of the altcoin market cap, as I consider Bitcoin and Ethereum to be the blue chips. Now let's move to the graph. You will see that there was a spike in the global liquidity as central banks around the world stimulated the economy heavily. That is why we had a major bull run in 2021. They purchased a substantial amount of government securities, bonds, and printed currency with the goal of stimulating the economy. A lot of businesses were closed during the pandemic, and therefore they had to print money to give this stimulation to businesses and of course individuals. After this stimulation, as expected, the inflation reached record levels. And if we take US as an example, we will see that from May 2020, the inflation rate was only 0.1%, and it went all the way up to 9.1% in June 2022, which is a really huge number. The central banks then decided that they had to tighten the economy because they had to tame inflation. And the way that they can do that is by restricting the supply of money into the economy. Again, let's have a look in United States. From 0.25% that was in January 2022, really rapidly it went all the way up to 5.5%. This makes it extremely difficult for people to borrow money from banks, either to start a business or for whatever other reason, and of course pay their loans, as when they took a loan, the interest rate was almost zero, but now it went all the way up to 5.5%. That means probably that if you had a loan before and the payment was 1,000 euros or USA in dollars, now it doubled probably. So now you pay $2,000. That means that the money that the household has available for investments or for moving the money in the economy is reduced substantially. And therefore, this restriction is what the central banks around the world want. But if there is blood in the streets, as Warren Buffett says, it's a good time to accumulate commodities, stocks, crypto, or whatever asset that you believe is the one that you understand better. So I'm going to explain what one can do on the crypto side, which is the site that I use, and therefore explain and see if altcoin season is in or it's not. By observing the global liquidity graph and altcoins, which are considered risky assets, we can see there is a strong correlation. This in short means through the years, if you only allocated capital to crypto when the balance sheets of central banks grow, your portfolio is probably looking good. And vice versa. If you ignore the global liquidity, your portfolio is not looking very good, as you made allocated capital at times that you shouldn't. If we have a closer look on the blue line and the red line, we will see that they increase together and they decrease together. And even if you see the spikes on the global liquidity, you will see the spikes on the market cap of altcoins. And if someone wants to mathematically check if that is true, it can calculate the correlation between the two lines. And we have done that, and you will see that the correlation between these two lines is very strong at 0.78. And that means, in short, that altcoins, which as I said before are risky assets, grow together with the global liquidity. And we will see Bitcoin as well, but first, because the concept of this video was around altcoins, we will see that when the global liquidity increases, altcoins are doing really well, but also when the banks are contracting their balance sheet, that means that altcoins are expected to go down. This graph shows the Bitcoin market cap and global liquidity. The red line is the global liquidity and the blue line is the Bitcoin market cap. And as before, we see the same behavior. After the pandemic, when the global liquidity increased, also the price of Bitcoin increased. And an important observation is that when the global liquidity peaked, also the Bitcoin price peaked. And after that, as the global liquidity was reduced, also the Bitcoin price was decreased. The correlation between the Bitcoin market cap and the global liquidity is not that strong if we use the same time frame of 90 days lately, due to the spot Bitcoin ETF news. When there are major news for an asset, you expect the price of this asset to not behave the same as before, and therefore there is a divergence between the Bitcoin price and the global liquidity. But in general, is strong again, the correlation is strong. And I will take this opportunity and stress something that I think is important. I know that many people are in the crypto industry because of the small market cap and the possibility of high returns. But it's important to know that Bitcoin, except from the high returns, offers a protection against the debasement of currencies. Taking the opportunity that Jerome Powell, the chair of the Federal Reserve, gave us 2 days ago, I wanted to stress also the unsustainable path that the US debt has, as I was quite vocal about this in 2022 and 2023. He was publicly admitted that the US debt is unsustainable. So I will have a link in the description below about this video, and I think everyone should watch it. Now let's move to the point that I wanted to make. When we calculated the US debt, we saw that in using the data of the past 55 years, we saw that the equation that better describes the US debt is an exponential one, this is really scary. I was puzzled about this when it was not said loudly by many. As the US is one of the strongest economies, but the numbers were pointing to an unsustainable debt. With all this debt created, the most logical path is for the Fed to print more dollars to meet their obligations. That will result in the debasement of dollars, and assets that hold their value like Bitcoin will first protect you from this outcome, but also, as Bitcoin is a technology and not only a commodity, people will have the opportunity to write an asset that for the last 14 years outperforms all others. There are many macro indicators that one can watch, but the main takeaway from this talk is that the global liquidity benefits risky assets such as crypto and Bitcoin. If you believe altcoin season has started, closely monitor the balance sheets of central banks. When you see the global liquidity rising and the altcoin index is at the levels you are happy with, then maybe allocating to altcoins is not that bad of a decision. Of course, you need to always monitor your risk. And we have built a more sophisticated model to help people monitor their risk daily. And I will leave some details in the description below. Moreover, the modern monetary system is broken, and you need to think of ways to protect yourself from the mistakes of governments and central banks, of course. Bitcoin seems to be a great candidate to fill this role. But please let me know in the comments if you found any alternative assets that you believe can protect us from the currency debasement that continues to increase decade by decade, but also has great returns. To answer the question that you have said on the beginning about altcoin season, based on the global liquidity that we see, the yellow line that is decreasing, and also that the altcoin season only stayed above the 75 region for a couple of days, then we are not officially in altcoin season. But of course, based on your risk level, you can decide to enter the altcoin market whenever you feel it's okay with your risk tolerance. But mathematically, we are not officially in altcoin season. Do not forget to like the video if you found it helpful and leave us a comment with your thoughts. Until next time, bye bye.